Ticker symbol ULTY, the YieldMax Ultra Option Income Strategy ETF that has a 84+% distribution rate as of filming this video. This ETF is becoming extremely popular in the dividend income investing community, so much so that I constantly have investors asking me questions about it, asking me if I own shares of it, if I plan on buying it, etc. Now to cut right to the chase, I actually recently did add some shares of ULTY to my portfolio and I plan on buying more moving forward, just in case you guys were wondering, and along with it I intend to explain exactly why in today's video. But to cut right to the chase, in this video we're going to go over ULTY. I'm going to explain to you guys how this ETF works because it is very confusing and I still see a lot of dividend investors get it quite wrong. Like I mentioned, I'm also going to share with you guys why I personally am adding some shares of ULTY to my long-term portfolio, and I've already added some as of recent. So I promise you, if you're interested in this one, if you hold on to it, you're definitely going to want to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So I came across this article from Stephen F on seekingalpha.com, and he broke down very nicely exactly some of the risks associated with the ULTY and how it's different from other YieldMax ETFs, etc. Now this is something I see tons of different investors asking about, so I figure why not make a simple video that I can point everyone to and just break it all down very simply. First, going over some of the risks of ULTY, it says there are reasons to be skeptical about this investment. This is of course from Stephen's article. Investors should do their own due diligence, read through the prospectus, and conduct additional research before allocating capital toward ULTY or of course anything toward the markets. The first risk is going to be capital erosion. As the share price has declined a lot since inception, although as of recent, the share price has been much more steady. ULTY uses the same strategy as other ETFs to generate income by running covered calls on its portfolio, which caps the upside potential. ULTY's portfolio carries the risk of losing some or all the principal amount invested, and there's no risk mitigated strategy built into the option strategy. ULTY's high distribution rate often includes a return of capital, which can reduce its net asset value or NAV over an extended period of time. The distributions can also fluctuate as premiums in the option market change. While ULTY offers the potential to generate large amounts of income, it may not offset the potential equity loss, and investors should be aware of this. So here's the very interesting part of this article that I really wanted to share with you guys. The writer explains how MISTY, another very popular YieldMax ETF, is very different from ULTY, and chances are if you're interested in MISTY, you probably are also interested in ULTY or vice versa. It says how ULTY is different from other YieldMax ETFs that I have invested in. MISTY is a single focus ETF around MicroStrategy or MSTR, but it doesn't directly own shares of MSTR. What MISTY does is create synthetic exposure to MSTR and then utilizes a call option strategy to generate income. The MSTR call options and sell MSTR put options to replicate MSTR's movement in the stock markets. The contracts are bought and sold within a 1 to 6 month term duration at or close to the current share price of MSTR. This will allow MSTY to sell covered calls against the calls that it owns to generate income. It is effective because less capital is used to create the synthetic long position rather than buying blocks of 100 shares of MSTR like a normal covered call strategy. Now here's the important part. ULTY on the other hand is much different. Listen in. The fund advisor cares about implied volatility or IV, which is a measure of the market's forecast regarding a likely movement in a security's price. It represents the expected volatility of an option during its duration, which helps traders determine pricing strategies for option contracts. The fund advisor will look to invest in securities with higher implied volatility, as this generally leads to increased option premiums, which is important for the distribution income. Unlike the YieldMax products MISTY or even NVDA, ULTY can take a direct approach and a synthetic approach to establish a position in an underlying equity. Now from another article from Jack Bowen from Seeking Alpha, it also says, so what is ULTY? Well, it's a manager's option playground, an actively managed ETF that seeks to generate monthly income from a portfolio of covered call strategies. Here's the cool part right here, and this is what I think is enticing a lot of investors, including myself, to buy at least a few shares of ULTY just to see how things go. It says essentially the fund is designed to produce as much income as possible from engaging in covered call strategies, and the fact that the managers can select stocks at will, and they're only restricted on things like liquidity and geography on their stock selection. ULTY over the past several months has definitely offered investors a boatload of weekly income generation duration, and along with that, the ETF has grown even slightly, offering a total return of almost 12% in the past 1 month. This ETF does carry a lot more risk than a lot of other ETFs in my long-term portfolio, so that's why I'm going to be buying this ETF on a slow and steady pace, just adding some shares here and there, and especially on red days, stacking up more and more shares to hopefully generate as much income as possible for as least amount invested as possible. Not to mention, with an 84% distribution rate, it in theory wouldn't take all that long whatsoever for ULTY to completely pay off your initial investment and then to be playing with the house's money. But again, because this ETF strategy is much different than lots of the other YieldMax strategies, you have to understand the risks involved and ask yourself if it fits what you're looking for your portfolio. So now that we talked about the super popular ULTY YieldMax Ultra Option Income Strategy ETF, which is an ETF that's generally speaking trying to generate as much income as possible for us investors, I share with you guys what this ETF has to offer and even why I'm planning on adding some shares of it in my portfolio. And lastly, most importantly, I have a question for you guys down below. When it comes to ULTY in your long-term portfolio, whether you own 0 shares or 1,000 shares, comment down below how much ULTY you have as of right now, just out of curiosity. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.